Going over the hypothetical trading system signals for the last 2 days, we did not trade live, so these are hypothetical. Let's go over yesterday's trades first. These are FOMC day trades. 0 for 5, minus 83.70 on the day. Only NASDAQ strategies trade Viper, tick pullback, tick reversal, 2023 tick reversal, and then momentum reversal. So two tick reversals. All of these strategies lost. 0 for 5, minus 83.70 on the stock index portfolio 16 plus BLITZ 5. And then today, the strategies were back up, plus 14K on the day, almost 15K on the hypotheticals. And so over the last 2 days, the strategies are up about 6,500 hypothetical. So good results. The problem that I have is the size of the P&Ls on a daily basis seem to be expanding. Larger losing days, especially. So the volatility in these accounts are growing, and so I have a problem with that. And so I want to back off and readjust for volatility. And so I want to show you the portfolio calculator, and then we'll go over the trades. So this is the portfolio calculator through Tuesday. It hit a worst case drawdown, and we let's see, had that $19,000. Had a worst case losing day on Tuesday as well. And so the stock index portfolio 16 plus BLITZ 5, and then since then it's up 6K, so it's minus 33K. And so we're used to this expansion in volatility, expansion in drawdown curve, expansion, and so I don't think the systems are necessarily broken per se, as much as the daily P&Ls are growing and in both directions. And so we want to manage that a little better and cut back on the number of strategies and potentially the position sizing as far as the contract size traded. Let's look at the stock index portfolio 16. This is backing off. This is 16 systems now. It's kind of a low number of systems from what we've been trading. And today, or yesterday, this was down, I believe, 6,000. The drawdown was 17,000 as of yesterday. So it would have technically been a good time to start trading that, and then today it would have been up 13K. And so if we started trading in January, this is the setup that I would recommend. If January was to start, stock index portfolio 16 MIT, I would trade this without the BLITZ. Only 16 strategies now. Typically we trade more strategies, but with this extra volatility, we're cutting back, focusing on market internal based strategies. Also, the P&Ls are still pretty high for a 200 to 250K account. You have to size it based on your psychology. You know, can you handle 11,000 or a new worst case losing day of 15,000? The $19,000 losing day that I showed you was in the stock index portfolio 16 plus BLITZ 5. So that was in this setup. And so scaling back further, reducing risk even more by trading less strategies, and at the potentially the risk of lower diversity, you are here at a lower worst case losing day. And so if this continues to expand, then the drawdown, I like the drawdown curve, but we want to continue to manage this. I'm also looking at better ways to manage intraday stop losses. It'd be great to find a way to say, hey, if we're down 3K on the day, we're done, and that really reduces our downside while still capturing the upside. Sometimes you'll find that when you try to manage risk too tight, if it's too tight of a risk management, you'll miss the big winners too. And so sometimes it's hard to strangle it that tight, and so it may not be possible. It's a long research project that I'm still working on, and so looking forward to having that though. If it can help us out, it'd be a huge benefit to say, hey, we're going to risk on an end of a 1 minute bar if we're down more than 3K. We're getting out for the day, down 1.5% on a 200K portfolio, and we can live with that from a risk management perspective. So let's look at the trades on the day, yesterday and today. So yesterday was just wild. The FOMC statement came out right in here, and the market closed higher than when the FOMC statement came out. The FOMC statement was extreme. The market sold off into the FOMC statement. Then the FOMC statement was very hawkish, which is bearish. The Fed did not give the market what it wanted. A roadmap to easing soon, easier monetary policy soon, but reiterated tighter monetary policy, higher interest rates to fight inflation, determined to really fight inflation. $95 billion a month off the balance sheet is going to continue, and so the market just said, nope, we're closing higher than where the statement came out, and so that's what happened. Very contrarian. It did sell off going in, and then we had a lot of strategies that traded in this bouncy price action, long trades getting stopped out, and then today the market gap down continued, propped. Used to seeing this prop once again, 1300, but did bounce much. So I think we're due for more. We should be due for more downside now. It's really range bound. We keep going around in this range right here, and maybe that'll be the way the year ends. Maybe it'll just go back and forth in this range, or the market could finally capitulate like it did in 2018 and throw another taper tantrum, the longest delayed taper tantrum ever. And so today momentum reverse was up. Yesterday it was down. Today tick retracer was down on the short side. One of the few losers. It was a good signals today on the short side. This is one of the losers on the day. Trend select, profitable on the day. These are two E-mini trades. VTNQ up on the day. No follow through. We're not getting those afternoon follow throughs. A lot of these strategies will get in, and historically you'll see the market trend go sideways and then continue the trend. And this year we're just not seeing it, especially on the downside. It just won't continue on the downside, and even though we're in a bear market, so supposedly a bear market. Tick count trend, 2 for 3 up on the day. Cobra 3 hit its profit target near the lows. Very efficient trade today on that. Viper lost one, won one, barely up on the day. Tick reversal up on the day, 2 for 2. Tick wave up on the day. Nice trade there. ES trades, Cobra 3 up on the day, and Tick Wave ES up on the day. So good trading today and up overall the last 2 days. But once again, I don't have a problem with the strategies per se. It's just this expansion in volatility is correlated with an expansion in price movement, and it's hard to quantify. It's hard to measure. If we look at the VIX, you see the VIX here on the far right hand chart. That level is not very high, but you do see a lot of whipping around. So you don't see big daily ranges, and you don't see a big VIX. You don't see any capitulation. You do see this divergent. Here's the triple Qs, which correlate to the NASDAQ. Very divergent price action. Sometimes divergent price action is a sign of a massive volatility event. It's not priced into the VIX. The VIX says volatility is going to be low, so maybe it'll just chop into the end of the year. And so, it's hard to quantify. It'd be nice to say, well, because of this, we're going to not trade this group of systems or reduce our position size, but it's hard to quantify all this back and forth price action intraday. It's a bit unprecedented to have this much, and in my opinion, the market is just propped beyond anything I've ever seen. Should be going down and should be trending down, and it will not. It's not going to give up a downtrend to the end of the year. The bulls are holding up, and so that's why it's causing such a big price action. So these are hypothetical trades on the day. I continue to research the money management algorithms and position sizing and new strategies and portfolio setups for 2020.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.